Hey everyone, welcome back to Corporate Decoder. Today EQR just filed an 8K and I'm seeing one key takeaway about their latest results. Quick note, this is not financial advice, just my take on public filings for educational purposes. This 8K mainly points to a press release about their first quarter 2026 earnings. And it actually confirms some recent headlines we've been seeing. Here we are looking at Equity Residential's 8K filing from the 28th of April 2026. This is a current report, which means it is used to disclose significant events that happen between their regular quarterly or annual reports. The company filing this report is Equity Residential, a big name in the real estate investment trust or REIT space specifically focused on residential properties. You might know them better by their ticker symbol EQR. They are a large player with a market cap in the billions and employ thousands of people. The main event here is the announcement of their results of operations and financial condition as of the 31st of March 2026 and for the quarter that just ended. Essentially, this filing is a heads up that they've released their latest earnings report. This press release, which is attached as an exhibit, is where all the juicy details are, and from what we're seeing in the news, it seems like the market has had a mixed reaction. Headlines suggest that while resident turnover is at a record low, which is generally a good sign for stability, the company also missed its first quarter earnings estimates. This tells us there might be underlying pressures affecting their profitability, even with happy residents. Equity Residential's common stock is traded on the New York Stock Exchange under the symbol EQR. This filing doesn't provide the actual financial numbers from the press release here, but it does confirm that this is the document where those details were officially shared with the public. The fact that resident turnover is at a record low is a significant positive. This usually means residents are staying longer, which reduces costs associated with finding new tenants, cleaning units, and making repairs. For a REIT like Equity Residential, stable occupancy and long-term residents translate directly to more predictable rental income, which is the lifeblood of their business. It suggests that their properties are desirable and well managed, leading to tenant satisfaction. However, the news of them missing earnings estimates is a clear signal that something else is at play. This could be due to several factors. Maybe operating expenses have increased more than anticipated. Or perhaps they are facing competitive pressures that are limiting their ability to raise rents as much as expected. It could also be related to broader economic conditions impacting the housing market or the cost of capital. We are not going to dive into the press release itself today, as it would take too long to read through all the details. However, the existence of this 8K and the accompanying press release are important because they mark the official release of the company's financial performance for the first quarter. Investors and analysts will be poring over those numbers to understand the extent of the earnings miss and what might be driving it. We'll be keeping an eye on their subsequent filings and public statements to see how they plan to address any challenges and capitalize on their strengths, like that record low resident turnover. Right now, based on the limited information in this 8K, the story is one of strengths in resident retention meeting challenges in profitability. It is a classic case of good news. And it highlights the need for a deeper dive into the actual earnings report to understand the complete picture. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, please like and subscribe for more insights and join our Discord community in the description.